Based on the historical data and forecast, Bitcoin has shown a downward trend, with the forecast indicating further declines. The RSI consistently remains below 30, signaling oversold conditions, suggesting a potential for a bounce, but the overall trend is bearish. The Bollinger Bands show that the price is approaching the lower band, which could indicate a potential short-term rebound. Considering these factors, I recommend a strategy that combines RSI and Bollinger Bands. We will initiate a long position when the RSI reaches an oversold level below 20 and the price touches the lower Bollinger Band. Specifically, we should enter a long position at $81,800. Given the bearish forecast, we will set a tight stop loss at $82,200, just above the lower Bollinger Band. For the target price, we will aim for a conservative gain, anticipating a short-term bounce. We will set a target price at $86,300, aligning with the recent support level. This strategy prioritizes risk management with a close stop loss while capitalizing on potential short-term rebounds in an overall downtrend. The portfolio will be 60% long Bitcoin, 40% in cash. Based on the historical data and forecast, Ethereum shows a downtrend, especially considering the recent forecast prices dropping to $2,660. The RSI consistently remains below 30, indicating an oversold condition, while the Bollinger Bands are widening, suggesting increased volatility. Given this scenario, I recommend a contrarian strategy focusing on short-term gains. We will implement a combined RSI and Bollinger Band strategy. First, we will wait for the price to reach the lower Bollinger Band, which is currently at $2,710. Then, we will enter a long position at $2,710. The stop loss will be set just below the lower Bollinger Band at $2,680 to mitigate potential losses if the downtrend continues. The target price will be set at $2,980, aligning with the recent resistance level and providing a reasonable profit margin. To optimize this strategy, we will incorporate a risk management approach. We will allocate only 2% of our capital to this trade, given the high volatility. If the price reaches the target of $2,980, we will take partial profits and move the stop loss to break even to protect our gains. If the price falls below $2,680, we will exit the trade entirely. This combined RSI and Bollinger Band strategy, with clearly defined entry, stop loss, and target prices, aims to capitalize on short-term bounces while minimizing risk in a volatile market. The portfolio will be 60% RSI strategy, 30% Bollinger Band strategy, and 10% support and resistance prices strategy. Based on the historical data and forecast, XRP exhibits a downtrend with decreasing prices, particularly evident in the recent forecast period. The RSI consistently remains below 50, indicating a bearish momentum. We will implement a short-selling strategy utilizing the Bollinger Bands and RSI. Our entry price will be $2.01, coinciding with the forecast price on December 5, 2025, and the lower band touch. A stop loss will be set at $2.05, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The target price will be $1.8, the established support level, aiming for a significant profit margin. To refine this strategy, we will incorporate RSI signals. When the RSI falls below 30, indicating an oversold condition, it reinforces our short position. Conversely, if the RSI rises above 70, signaling an overbought condition, we will consider exiting the position or tightening our stop loss. The combined strategy leverages both technical indicators to maximize potential returns while mitigating risk. This portfolio will be 70% short XRP and 30% in cash to reduce risk. Based on the historical data and forecast, BNB is exhibiting a downtrend, particularly evident in the recent forecast period with prices consistently declining. The RSI consistently remains below 50, frequently dipping into oversold territory below 30, suggesting the asset is undervalued. Considering the support price of $804 and the forecast price dropping to $739, a contrarian strategy focused on short-term gains appears viable. I recommend a short position entry at $824. The stop loss should be placed just above the recent high of $895 to protect against a potential reversal, and the initial target price should be set at $774, aligning with the forecast for December 4, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band confirms the downtrend. If the price touches the support level of $804, consider adjusting the stop loss to $813. If the price reaches the target of $774, consider taking partial profits and setting a new target at $757. This layered approach allows for capitalizing on the anticipated downward movement while mitigating risk through strategic stop-loss adjustments and incremental profit-taking. The combined RSI and Bollinger Bands analysis strengthens the conviction for a short position with carefully managed risk parameters. Based on the historical data and forecast, Solana exhibits a downtrend, particularly evident in the recent forecast period with prices declining from $127 to $112. The RSI consistently hovers below 40, indicating a bearish momentum, and frequently enters oversold territory below 30. The Bollinger Bands show that the price is approaching the lower band, further confirming the downtrend. My strategy will be a short position. I recommend entering a short position at $127, placing a stop loss at $126 just above the forecast high, and setting a target price of $115, aligning with the forecast low. This strategy leverages the downward momentum and utilizes the Bollinger Bands and RSI to define risk parameters. To refine this strategy, I'll incorporate a layered approach. The initial short position at $127 with a stop loss at $126 and target at $115 will be the primary trade. As the price moves favorably, I will add to the short position at $121, the support level, with a tighter stop loss at $122 and the same target of $115. This allows for increased profit potential while managing risk. The combined strategy aims to capitalize on the prevailing downtrend, utilizing both technical indicators and key support/resistance levels to maximize returns and minimize potential losses. Based on the historical data and forecast, TRON shows a downtrend with consistent support around $0.277. The RSI consistently hovers below 50, indicating a bearish sentiment, with dips into oversold territory below 30. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential breakout. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position at $0.265 when the price touches the lower Bollinger Band and the RSI is near oversold levels. A stop loss will be placed just below the support level at $0.262 to protect against further downside. The target price will be set at $0.278, aiming to capture a quick profit from a potential bounce off the support. To enhance the strategy, we will implement a layered approach. If the price reaches the target, we will move the stop loss to the entry price of $0.265 to secure profits and potentially ride further upward momentum. If the price fails to reach the target and starts to decline, we will exit the position at the initial stop loss of $0.262. This strategy combines technical indicators and price action to capitalize on short-term fluctuations while managing risk effectively. The overall portfolio will allocate 5% of the total capital to this TRON trade, balancing risk and potential reward. Based on the historical data and forecast, Dogecoin shows a clear downtrend. The price has been consistently declining over the past 2 weeks, and the forecast for the next week predicts further drops. The support price remains steady at $0.117, while the resistance has been breached. The RSI consistently hovers below 50, indicating a weakening momentum. Considering the RSI values are generally between 32 and 43, it's neither significantly oversold nor overbought. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential trend continuation. Therefore, I recommend a short position strategy. My strategy is to short Dogecoin at $0.148. The stop loss should be set at $0.158, just above the upper Bollinger Band, to protect against a potential short-term reversal. The initial target price is $0.136, aligning with the recent low and the forecast price on December 3, 2025. If the price breaks below $0.136, I will adjust the target price to $0.119, based on the forecast for December 7, 2025. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. Based on the historical data and forecast, Cardano is exhibiting a clear downtrend. The RSI consistently remains below 30, indicating an oversold condition, but lacking a significant upward momentum. The Bollinger Bands are contracting, suggesting decreasing volatility, and the forecast predicts further price decline towards 0.348. Therefore, I recommend a short position strategy. Entry price should be $0.386. Set a stop loss at $0.389 to protect against a potential bounce. The initial target price is $0.363, aligning with the support level. To maximize returns, we will implement a dynamic strategy. If the price reaches the initial target of $0.363, we will move the stop loss to the entry price of $0.386. Subsequently, if the price continues to decline, the next target price will be $0.348, based on the forecast. This approach allows us to secure profits while minimizing risk and capitalizing on the predicted downtrend. The RSI and Bollinger Bands confirm this downward trajectory, providing further confidence in this short position. Based on the historical data and forecast, Bitcoin Cash demonstrates a fluctuating trend with periods of consolidation and minor upward movement. The support price consistently remains at $521, while the resistance fluctuates around $547. The RSI values fluctuate between 44.5 and 59.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands show volatility, with the price frequently touching the upper and lower bands. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands to maximize potential returns. My strategy involves a layered approach. First, when the RSI falls below 45.0, indicating an oversold condition, enter a long position at $522. Set a stop loss at $519, just below the lower Bollinger Band, to mitigate potential losses. The initial target price is $534, aligning with the recent resistance levels. Second, when the RSI exceeds 55.0, indicating an overbought condition, enter a short position at $547. Set a stop loss at $550, just above the upper Bollinger Band, to limit risk. The target price for this short position is $536. This combined strategy aims to capitalize on both upward and downward price movements, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH exhibits a downtrend. The RSI consistently remains below 50, often dipping into oversold territory below 30, indicating a bearish sentiment. The forecast for the next week projects further decline, with prices expected to fall to $2,900. Considering these factors, I recommend a short selling strategy. Entry price will be $3,030, with a stop loss set at $3,240, just above the recent high. The initial target price will be $2,900, aligning with the forecast. To refine this strategy, I'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. However, the downtrend and bearish indicators outweigh this signal. If the price touches the lower Bollinger Band around $2,900, it could be a good opportunity to take profit. I will adjust the target price to $2,900 if the RSI confirms an oversold condition. This combined approach offers a balance between capitalizing on the prevailing downtrend and mitigating risk with technical confirmation. Based on the historical data and forecast, Kaia demonstrates a clear downtrend. The RSI consistently remains below 50, indicating prevailing selling pressure, and recently dipped below the oversold level of 20 on several days. The forecast for the next week projects further declines, with prices reaching as low as $0.0666. The Bollinger Bands are contracting, suggesting increasing volatility and potential for a significant price move. Given this bearish outlook, I recommend a short selling strategy. We will enter a short position at $0.0788. A stop loss should be placed at $0.0817 to protect against a potential rebound. The initial target price is set at $0.0749, aligning with the first day of the forecast. To refine this strategy, we will incorporate RSI signals. When the RSI falls below 20, oversold, it suggests a potential bounce, but in this case, the overall trend is downward. If the price retraces to $0.0812 and the RSI is above 30, we will consider covering the short position. However, the primary strategy remains shorting. If the price reaches $0.0749, we will take profit. If the price continues to decline, we will adjust the target price to $0.0688 based on the forecast. This combined strategy leverages both technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Tezos exhibits a clear downtrend. The closing prices have generally decreased from 0.546 to 0.433, and the forecast suggests further decline. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands are narrowing, which often precedes a significant price movement. Given the current RSI of 32.7 and the forecast prices continuing to fall, I recommend a short position. Entry price should be $0.469, with a stop loss placed above the upper Bollinger Band at $0.458 to mitigate potential losses if the price unexpectedly reverses. The target price for this short position is set at $0.433, aligning with the forecast low. This strategy combines technical indicators and forecast data to capitalize on the prevailing downtrend. The RSI nearing oversold conditions provides an additional layer of confirmation. The portfolio is heavily weighted towards this short position due to the strong bearish signals. The risk-reward ratio is favorable, given the potential for a significant price decline and a relatively tight stop loss. This strategy aims to generate high returns by exploiting the current market conditions. Based on the historical data and forecast, Internet Computer shows a downtrend. The RSI consistently remains below 60, indicating a lack of strong bullish momentum. The recent RSI values hovering around 39 to 49 confirm this bearish sentiment. Considering the forecast for the next week, the price is projected to continue its decline, reaching as low as $3.8. The support price of $2.89 provides a floor, while the resistance of $4.62 presents a ceiling. Combining these factors, I recommend a short position strategy. We will enter a short position when the price reaches $4.25. A stop loss will be set at $4.6 to protect against unexpected upward movements. The initial target price is $3.8, aligning with the forecast and the recent downward trend. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the upper band, which is currently around $8.45, it signals an overbought condition, reinforcing the potential for a downward correction. Conversely, when the price approaches the lower band, around $3.14, it suggests an oversold condition, which might provide a temporary bounce but is unlikely to reverse the overall downtrend. Therefore, we will adjust our target price. If the price reaches $3.8, we will take partial profits. If the price continues to decline, we will further lower the target price to $3.87, aligning with the forecast. This multi-stage profit-taking approach mitigates risk and maximizes potential returns in a declining market. Based on the historical data and forecast, Compound shows a clear upward trend, especially with the forecast price consistently increasing from $32.7 to $35.1. The RSI consistently dips below 37, indicating oversold conditions, and the Bollinger Bands are widening, suggesting increasing volatility and potential for price movement. Therefore, I recommend a long position strategy focusing on capitalizing on the upward trend and the oversold signals. We will enter a long position at $32.7, placing a stop-loss order at $31.7 to mitigate potential downside risk. The target price will be set at $35.1, aiming to capture the anticipated upward movement based on the forecast data and the widening Bollinger Bands. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the RSI rises above 60, indicating overbought conditions, we will consider taking partial profits or tightening the stop-loss. Conversely, if the price touches the lower Bollinger Band, it reinforces the oversold signal, and we can consider adding to the position. The final portfolio will be a combination of these strategies, with a 60% weight on the initial long position at $32.7 with a stop-loss at $31.7 and a target price of $35.1, and a 40% weight on a dynamic adjustment strategy based on the RSI and Bollinger Bands. Based on the historical data and forecast, TRON shows a downtrend with consistent support around $0.277. The RSI consistently hovers below 50, indicating a bearish sentiment, with dips into oversold territory below 30. The Bollinger Bands are narrowing, suggesting decreasing volatility and a potential breakout. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will enter a long position at $0.265 when the price touches the lower Bollinger Band and the RSI is near oversold levels. A stop-loss will be placed just below the support level at $0.262 to protect against further downside. The target price will be set at $0.278, aiming to capture a quick profit from a potential bounce off the support. To enhance the strategy, we will implement a layered approach. If the price reaches the target, we will move the stop-loss to the entry price of $0.265 to secure profits and potentially ride further upward momentum. If the price fails to reach the target and starts to decline, we will exit the position at the initial stop-loss of $0.262. This strategy combines technical indicators and price action to capitalize on short-term fluctuations while managing risk effectively. The overall portfolio will allocate 5% of the total capital to this TRON trade, balancing risk and potential reward. Based on the historical data and forecast, SUN token exhibits a downtrend. The price has been consistently approaching the support level of $0.0192 and the forecast indicates a further decline towards $0.0194. The RSI consistently stays below 50, with readings dipping below 33 in the recent past, suggesting a lack of strong bullish momentum. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is nearing the lower band, which further reinforces the bearish sentiment. Therefore, I recommend a short selling strategy with an entry price of $0.0203. Place a stop-loss order at $0.0228, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The target price for this short position should be $0.0194, aligning with the forecast price and the established support level. If the price reaches $0.0194, consider closing the position to secure profits. Alternatively, if the price breaks through the support level of $0.0192, consider tightening the stop-loss to $0.0190 to capture further downside potential. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk, given the prevailing bearish trend. Based on the historical data and forecast, Quant demonstrates a clear upward trend. The price has consistently tested and rebounded from the support level of $88.9, while the forecast predicts continued price increases. Considering the RSI, the asset has been fluctuating between 37.9 and 66.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently moved outside the upper band, suggesting a potential for a short-term pullback, but the overall trend remains bullish. Therefore, I recommend a long position strategy. I suggest entering a long position at $96.5. Given the recent upward momentum and the forecast, a conservative stop-loss should be placed just below the support level at $86.5. For the target price, aiming for $107 based on the forecast provides a reasonable profit margin. If the price breaks through the $107, I suggest moving the stop loss to the entry price of $96.5 to protect profits. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while mitigating risk. Based on the historical data and forecast, PAX Gold exhibits an overall upward trend, supported by consistently breaching the $4,000 level and the forecast predicting prices above $4,200. The RSI indicator fluctuates but generally remains above 50, suggesting bullish momentum. The Bollinger Bands show the price approaching the upper band, indicating potential overbought conditions. Therefore, I recommend a long position strategy with an entry price of $4,220. A stop-loss order should be placed at $4,150 to mitigate potential losses if the price reverses. The initial target price is set at $4,280, aligning with the forecast and the upper Bollinger Band. To refine this strategy, we will incorporate RSI signals. If the RSI drops below 40, consider a buy-in at $4,220, with a stop-loss at $4,150 and a target of $4,280. Conversely, if the RSI exceeds 70, consider taking profits at $4,270. This blended approach combines the overall upward trend with short-term RSI signals to maximize returns and manage risk effectively. The support price of $3,950 will also act as a secondary safety net if the price unexpectedly declines. Based on the historical data and forecast, NEXO has shown a recent downtrend, particularly evident in the declining Bollinger Band center and the RSI consistently below 40. The forecast for the next week suggests continued downward pressure, with prices hovering around $0.93 to $0.95. Given the oversold conditions, RSI below 29, observed recently, a contrarian strategy focusing on short-term bounces is advisable. I recommend a long position entry at $0.932, placing a stop-loss at $0.945, just above the established support level. The initial target price should be $0.961, aiming to capture a modest rebound. To refine the strategy, we'll incorporate Bollinger Bands. If the price touches the lower band, around $0.932, it signals potential oversold conditions, confirming our entry point. If the price reaches $0.961, we can consider moving the stop-loss to break even to protect profits. If the price continues to fall below $0.945, it indicates a breakdown of support, and the trade should be exited immediately to minimize losses. This combined RSI and Bollinger Bands approach aims to capitalize on short-term volatility while managing risk effectively. Based on the historical data and forecast, just shows a clear uptrend. The price has consistently tested and bounced off the support level of $0.0409, while the RSI has been fluctuating above 70, indicating overbought conditions. However, the recent upward momentum and the forecast prices suggest further gains. The Bollinger Bands have been expanding, confirming the increasing volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0432, coinciding with the first day of the forecast period. To manage risk, we will set a stop-loss order at $0.0409, just below the established support level. Our target price will be $0.048, aligning with the forecast price for December 8, 2025. This strategy combines the RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while mitigating risks. The RSI nearing overbought levels suggests a possible pullback, but the overall trend and forecast remain bullish. Therefore, this strategy offers a favorable risk-reward ratio, aiming for a substantial profit while protecting against potential losses. The portfolio will be 70% long position, 20% cash, and 10% short position.